right, guys. Welcome to the brand new Godly Trading Podcast. I'm here with my co-host, Nick, also known as my 21-year-old son. Say hi, Nick.
Hello, Godly Trading. Yeah.
And Nick is here to learn how to trade from scratch right before your very eyes. So, Nick, tell me what you know about trading.
Nothing. I know that it's trading money to money, but other than that, it's very little that I know.
Well, one of the interesting things about trading is that there are so many different areas that you can trade. But I think it's going to be great that people get to see what it's like to learn from scratch. Now, just for all of you out there, there are many moving parts when it comes to how to trade. And I firmly believe one of the most important things we need to do is nail down our why are we doing this, when are we doing this, all of those things. But we're going to get a rolling start today, and I'm going to dive right into showing Nick some charts, showing Nick a strategy, and showing Nick the actual mechanics so he can actually start practicing some of this while we go through the foundational, emotional, all of those things. So, Nick, let's jump over into a chart. By the way, everybody, just so you know, I'm starting Nick off with Forex, mainly because, well, there's several main reasons for Forex. Number one, it has the most flexible time for people. Forex is open. I'm in the central time zone, so is Nick. Forex opens for us for the week at 5 p.m. Central Sunday evening and stays open 24 hours a day until 5 p.m. Friday evening. So if you want to try to find some time to trade and the markets are actually doing the thing, Forex is a great opportunity. Number two, Forex has the lowest account size. If you want to trade actual money, you can put $10 into a Forex account and start trading real money. So I love that about it. I encourage everybody, if you are going to trade real money, if you just absolutely can't trade on demo, but you want to trade real money, put a small amount. Don't 1 day's pay, whatever that is. If you're just going to learn with some real money, just don't ever put more than 1 day's pay in there. Number three, oh my goodness, narrowing your choices. One of the problems that a lot of people have, Nick knows someone very familiar to me who has a thing called decidophobia. You give her too many choices and she doesn't like it. There are thousands and thousands.
I think we all have that.
Yes, well, we do all have that. There's thousands of stocks to choose from. There's 28 Forex pairs. And lastly, it's less volatile. One of the issues with stocks is that the New York Stock Exchange is the place you go to trade things that are traded. If you want to buy Apple, you're going to one place. You're going to the New York Stock Exchange, and it opens at 8:30 my time and closes at 3. Problem is that the next day, the Steve Jobs could have died overnight. I think he's dead, isn't he already? But anyway, Steve Jobs could have died overnight.
Yeah, Steve Jobs has been dead.
And so, anyway, the point I'm trying to make is that the price could have closed at $100 yesterday, and Steve Jobs dies, and the price opens at 50 the next day. You don't have that in Forex. By the way, everyone's saying, you're saying this word there, Pepper, Forex. What does that mean? Foreign currency exchange. So the US dollar versus the British pound. There's a market for the exchange rate. But think of it like you fly to London, to Heathrow Airport, on your way to wherever, and you want to buy a sandwich. So you stick $1 into the ATM there at Heathrow Airport, and it spits out 85 British pennies, right? That's you're exchanging one currency for another. There's just there's a global exchange for that. So that's why we're going to be showing Nick how to trade Forex. Now, ironically, just to show you how to work things today, Nick, we're going to start with stock, and we're going to start with Apple because Apple is everyone's favorite stock, isn't it? Now you have an interesting relationship with Apple.
Yes.
You're making a face.
I think I actually have Apple stock.
You do have Apple stock currently?
I think I might have had like $2 in it back in the day on my Robinhood or something like that. Robinhood is also another platform that you can use if you're not aware. Robinhood is on your phone, but it's not very great because it's very unintuitive.
It is. Now, it's good for people who have very little money. One of the things that Robinhood allows somebody to do, is buy partial stocks. Right now,
yes,
Apple is $241.84 is where it closed on Friday. So if you want to buy one share, you got to have $241. Or Robinhood will let you buy $10 worth of Apple, which is good. So it's a great place for beginners. I wouldn't recommend it for people who want to, but this whole thing is about getting started. So speaking of getting started, step number 1 for everybody who wants to follow along, go out there and sign up for a free TradingView account. I have no financial affiliation with TradingView other than I pay for it. TradingView is a great place for everyone to start. And chances are, if you see somebody on YouTube showing a chart, they're probably going to be showing a TradingView chart. So, Nick, you have already opened a TradingView account, correct?
Yes, I have a TradingView account under my email. Let me get
just show real quick how you did that. What are the steps to go open a TradingView account?
Yeah, so if we go to TradingView, I just pulled it up, looking up TradingView here. You can either click on Get Started here. That'll bring you to a sign up page. It is free until you decide to move on to other stuff. You have the monthly and annual option. I have already signed up, so I'm just going to do sign in. I'm going to sign in here. Mind all of the emails. This is going to get cut out in post.
Yeah.
So now we are signed in.
And there's a lot of things that TradingView does. If we go, besides just showing charts, it's got all kind of information and financials, and it's a one-stop shop for people, both investors and traders. We are traders here. Investing is a whole other show.
Yeah, and it really is good about, just looking at what I'm scrolling through. You can have community ideas. You can put strategies. I don't know what a strategy with trading is, but sure.
Yeah.
You can have crypto. You can follow people, yes.
In fact, Nick is going to be using an indicator, custom code, essentially, that I created. Well, I say I created. ChatGPT created it for me. But that I put on here and subscribed him to it. So, people can create things and let the rest of the world follow along with them just by subscribing to this. And it's all free. It's what I love about it. By the way, best thing about TradingView, it's all cloud-based. So if you go to a different computer or even your phone, everything looks exactly the same and it operates. There's no mobile version of it. The mobile version is literally what you see on the screen. That's one of the best reasons I like it, is that you don't have to worry about, if I don't know anything about trading, now I've got to learn 2 versions of the same thing. Oh, it's all the same. So wind your way to Apple. We were showing that a minute ago.
I'm on Apple currently.
You're on it currently. Oh, that's because I don't have my glasses on. All right. Get to the advanced.
Here. So just for everyone to see, if you go, actually there is a TradingView app.
There is a TradingView app, probably for both Android and, I know it's for Android because I have it. I assume anything on Android is on Apple. Now you still have an Apple phone, don't you?
It's literally the same thing. Yes, I still have an iPhone.
You say
it is literally the same exact thing as what's on the computer.
Speaking of Apple, you say you still have an iPhone, as if you have a plan in the future to not have an iPhone.
I do. I'm going to what's called a OnePlus 12R or OnePlus 12. I haven't made that decision yet. OnePlus is they're known as the flagship killer. They bring up when they were first around.
What is this term you're saying? OnePlus? Is that a company name?
Yes, OnePlus.
Okay. Never heard of it in my life. But then again, I'm old.
OnePlus. They were known as the flagship killer because, their phones start at $799 compared to iPhones, which start at $1099. They were known as the flagship killer to begin with because their phones would be like $449, and it had a better camera, it had a better battery, and sometimes a better processor than iPhones and Samsungs. They were called the flagship killer because they sold their phones for very cheap, but they were higher quality. They're more of an enthusiast brand.
I can see Nick is the tech guru of our family. He has always been interested in technology since he was very young. And people ask me, "Hey, what is your son do?" Well, he got his IT degree in college. Well, what does that mean? I don't know. I don't know. IT, that's what it means. That's just IT.
I fix printers. And I help people get back into their email, even when they won't let me talk. which is what happened yesterday.
In our godly trading
And if
community,
anyone notices that I'm looking off to the side, I am looking at my father, because otherwise, Sam's here.
see, I have Nick in the anyway. The other day in our godly trading community, which is on free community on Facebook. If you want to join, it's free, like I mentioned. You just go to Facebook groups and search for the word godly trading. Anyway, I refer to Nick there as the IT department, and funnily enough, how many folks do you have in the IT department? I said, well, just the one. It's just Nick. He's all we need.
It's just me.
He's all the IT that we need. All right.
Sure.
Have you found your way to the advanced chart that we were looking at earlier that has the indicators on it?
Yes.
Fantastic.
The advanced chart, that was a little bit tricky for us to find, but
yeah, show them how you found it.
He shared it to me, so I was able to go to the one that he shared with me, which was, dadgum, I cannot remember.
You know about the indicator?
Yeah.
Show them how you got from the TradingView main page to that Apple chart that has the indicator on it. Because I haven't done that in years. I use a bookmark to carry me straight there.
So I had this, and then it was up in calendar options, screeners. I think it was in watch list, and then advanced view. Nope, not advanced view.
It is advanced view, but you had the watch list open. And by the way, I recognize that there probably will be people who listen to this podcast on Spotify as opposed to watching it on YouTube. And I need to change the way I behave so that if you're listening on Spotify, it will get better as I take the fact that you don't have video in front of you into account.
It will be a video podcast on Spotify.
Oh, that's a thing?
Yes.
Well, again, this is why I have Nick around, other than the fact he's my child. Because he knows things like this. All right, so back on that main chart, that main advanced chart that you keep showing. And
here.
Yes. Not that one.
Well, if I go to the advanced view,
it pops up the watch list, I know.
Yeah, and it doesn't give me an option.
What's the X in the upper right-hand corner?
Goes back to the regular.
Okay. Well, I don't know.
You can tell we're professionals.
I don't know what you call this thing that I'm looking at, my screen. Let me share my screen while I'm at it so that you all can know what I'm trying to get Nick to go towards. It looks like this. Have you found it yet? Oh, yeah, Nick has found it. Fantastic.
I think it was because it was in my notifications.
All right, yeah, we'll get better at this, but hey, this is what happens. Now, if anybody's been following along with the, quote, Godly Trading podcast up until now, you'll notice that up until now, it's just been me talking. And I realized the other day, that's not a podcast. That's still just me talking. All right, so that's the forest indicator. Have you found your way to this chart? Oh, you are. All right.
Yeah, I already had it queued up.
Okay.
I'll have to figure out how I got there.
So let me walk you through what you're seeing. First things first, I want you to go onto your screen in the upper left-hand corner. You're going to find the word forest. And if you hover over that word, there'll be a little icon that you can click on. I want you to make forest go away. Then on the left-hand side of the screen, underneath Apple, you'll see the word forest. That's the indicator that's showing you what's on the page. Click on the icon, make it go away. So we're just going to look at what's called a naked chart. And these are Japanese candlesticks. At least they were until Nick clicked away. So a Japanese candlestick, these were invented in the 1800s, and it is a intuitively graphical way for someone to understand what happened during the course of a trading day. Let me turn mine off as well. We'll probably have to go back and forth on post for this. It's an intuitively graphical way for someone to see what happened during the course of a day. So, for instance, we're looking here on Apple. You see a bunch of green candles. These are called candles, by the way, because they have wicks. So you'll have a rectangle. Let me zoom in on a whole bunch of. So you see this. I'm gonna make them a little bit larger, like right here.
Yes.
Can you see my screen, Nick?
Mm-hmm.
So
I see your screen.
This candle right here, it's a perfect example. This shows the 4 pieces of information that you need to know when it comes to trading. Now, this chart shows every single day. One candle represents 1 day's worth of trading. You can set this to day or week or 4 hours or 1 minute. And all it says is that all the information inside of this is all the trades that happen during that time frame. So, for instance, this is set on day. Nick, you can see in the upper left-hand corner, you'll have 1H, 4H, D, and W. And make sure yours is set on D for day. You see what I'm talking about?
Wow.
Upper left-hand corner,
No.
you'll see the time frames that you can change. Should be next to indicators.
Indicators.
And you might need to right-click and add, customize your bar there, but they should be able to have that so you can change the time frame. We're going to be teaching Nick to what's referred to as swing trade on the daily chart for Forex. We're going to go into why we picked those things. It may or may not be appropriate for him in the end.
Oh, you said which one?
We're on daily.
I need to do?
We're on daily.
Daily.
And guys,
I have it set to 1 day.
Okay, fantastic. When you sign up for our Godly Trading coaching mentoring program where we teach you how to trade, it won't be quite the dumpster fire as this. It'll be slightly more streamlined. But for this purposes, we're getting a rolling start. So all day long, when the stock market is open, there are thousands and thousands, millions of people buying and selling Apple stock. And every single transaction is recorded and reflected in this candle. So what you see here
I'm assuming that...
Go ahead.
I'm assuming this is the candle.
Yes. Every rectangle on the screen. By the way, Nick is colorblind. So...
Yeah, that would probably be something I should have adjusted.
Yeah.
It's red and green, so as long as there's not
on your screen,
differentials.
Right-click anywhere on your screen and go down to Settings. And then go to Symbol. You can actually change the color. All we want is something that you can intuitively know means up and down. For most people, most people think green for money and red for lack of money. You could do black and white, whatever colors mean to you. So for mine, I've got red meaning
which one's up and down.
There you go. So just remember.
Okay, so that's
what's what is all I'm asking. That, and I would set the wicks. Okay, so let's dive into what this means. Open, high, low, close. Where did the price open? So I'm going to hover over Friday. Friday, the price of Apple opened about, you can see this in the upper left-hand corner, those little tiny text. It goes OHLC, and there's numbers next to it. Open, high, low, close. Anytime, no matter what way you have set your chart to candles, you can set them to bars, or you can set them to line. You're going to have those 4 pieces of information. So on Friday, Apple opened at $236.95. That is represented by the fact that this green candle rectangle starts right there. The high for that day was $242.09. That's represented by this tiny, tiny little wick on top of it. The low is represented by the other wick, and then the close is represented by the... Oh, I'm sorry, this is an update. The open is down here, the close is up here. Let's go to...
Okay, so this is the... going from mine. So this would be open, that would be close.
So if it's a green candle, it opens at the bottom and closes at the top. It's an update. It's a day when Apple gained in price. If it's a red candle, that means it opened at the top and closed at the bottom.
Okay.
See, what happens is price fluctuates all day long. So price will open at a point, go up or down during the course of a day, and then close at a point. Well, those 4 pieces of information are very important for people. So we are differentiating them by saying the open and the close are the rectangle, the filled rectangle. That's the open and the close. And the little lines that stick out the top and stick out the bottom, those are the highs and the lows. All of that is important information. We call those little lines that stick out of it a wick, because the whole thing kind of looks like a candle. Or at least it looks like a candle to the guy in Japan in the 1800s. So pick a day, Nick, and see if you can figure out what the open, high, low, and close is, and see if it makes sense to you. Make sure you're vocalizing it for those who are listening to us on Spotify. Pick any day.
Okay, well, it looks like Friday the 31st of January, they opened at 247-ish and closed down more towards 236 or 235.
Yes.
And then Monday, they're opening. Wow, they really went down on Friday. I guess the stocks are the Forex. I don't know what you call it normally. I guess they're open Monday through Friday.
Yes. So stocks are open. For instance, New York Stock Exchange. I mean, so this is NASDAQ. This has an open and close time. You cannot trade. Most people cannot trade this thing prior to 8:30 Central Time and after 3 o'clock Central Time, Monday through Friday. Yeah, we're not even going to worry about learning about off time trading. And that's why you have an open and a close to these things, is because literally they ring a bell to open it and they ring a bell to close it, and then they're done. And everything. So these candles, they represent what happened,
Yesterday.
that battle all day long between buyers and sellers. And clearly, this day that you mentioned, this is Friday, January 31st. That was a day where the sellers were in charge. Now, why? Well, if you go to the bottom of the page, bottom of the candle, you'll see this little, what is to me is green pentagon with an E inside of it, directly below it and to the left. See that right there?
Okay,
What's it say? Earnings.
They had earnings and revenue.
This is why I do not want.
So they had an earning meeting.
Yes, this is why I do not want new traders trading stocks. You can have an earnings report come out.
Okay.
And like I was in John Deere the other day. Earnings came out and it beat expectations by a lot, and the price cratered, fell off a cliff. I do not like the fact that stocks have these earnings announcements that happen overnight, and you have nothing. I mean, literally, it's like Steve Jobs dying. At some point in the course of Apple's stock chart, Steve Jobs died. I guarantee you the next day, the price of Apple fell off a cliff. And there's nothing you can do about it because the market is closed. Another reason I like Forex. You don't have earnings reports for countries, but you do have some events that drive news. But the market's open when these things happen. So you can get out 5 minutes before the report. Or the news happens, you can get out right then and there. Yeah, you're not going to be as fast as other people, but you can get out immediately. With stock, you have these big announcements that happen overnight, before or after the bell, and that they're going to affect what's happening. Now, what's interesting is you look here, this earnings report, the first thing you notice is price, it's called gapping. So the day before, which would be January the 30th, price closed at 237.
Mm-hmm.
The next day, price opened at 247. So the first thing that happened is the bell rings on the NASDAQ, and Apple is $10 higher than it was the day before. And it sells off all day long. Yes. Never try to apply logic to the stock market. Someone once said, the stock market can stay illogical longer than you can stay out of bankruptcy. Meaning, if you're trying to apply logic, you'll lose all your money. Just apply rules and principles and don't worry about it. So I am what's known as a technical trader. I don't care about the underlying fundamentals of, is Apple a good company, is Apple not a good company. I look at the chart and I see, where do I think Apple is going based on what I'm seeing, based on indicators and strategies and all of that. There are people who are fundamental traders. All they want to know is, who's running the company? How much debt does the company have? How much revenue is the company bringing in? I'm in this for the long haul, and I'm using what the company is doing as a way to drive my long and my short. Which brings up an interesting concept.
Okay.
In stock, Nick, there are two ways you can interact with a stock. You can buy it, and you can sell it, right?
Mm-hmm.
You buy it, and you sell it. If I had to ask you, hey, Nick, what do you know about stock strategy? What do you know about trading strategy? The one thing everyone says, could you come up with how you're supposed to make money in the stock market? We see it in movies and whatnot. See if you.
I mean, it would be
buy low,
sell high.
Buy low, sell high.
If the stock crashes, you buy it when it crashes. Or buy it when it crashes, and then whenever you see if you buy it at, I don't know, $2.87. If it goes to $4.87, you've made $2. You sell it. take your $2.
Basic premise is buy low, sell high, but you don't have to do it in that order. You can sell high, buy low. It's called shorting a stock. And essentially, you are borrowing someone else's stock, selling it at a price, waiting for this price to go down, buying it back, and returning it. Now, in this case, the person you're borrowing from is your broker. Forex is not that way. Forex, you're constantly exchanging one currency for another. But just for looking at trends, just for looking at what goes on in here, this day that we're looking at, January 31st, 2025, the sellers were in control. There was an initial surge of people, $10. It opened up $10 higher than it closed the previous day. It's called a gap, a massive gap. And that's probably your average mom and pop retail trader like you and I that's getting excited and going in, hey, look at that. Look what great earnings report happened. The news, Jim Cramer over on MSNBC said, buy, buy, buy. By the way, there's a fantastic.
Gotta love Jim Cramer. Crazy Cramer.
He is he's fantastic to watch, but you should do the exact opposite of what he says. There's actually an ETF out there, the anti-Cramer, that makes so much money doing the opposite of what Jim Cramer says to do. We won't go into why that is. But the rest of the day
watches Jim Cramer.
True. The rest of the day, the sellers, the bears, bulls are people who want price to go up or think price is going up. Bears are people who think price is going down. The bears were in charge all day long, and they actually drove price down lower than it closed the previous day. And that's all based on earnings. And then look, the next day after that, or 2 days later, there's another gap on this is on January the 21st. Tuesday. So price closed around 2:30 and opened the next day at 2:24. So it lost $6 overnight. And this is one of the things that can happen and discourage new traders. I was a brand new stock trader, and I was in a stock, and it did this, and it gapped open the next day down, and I had a stop loss in place. We'll talk about stop losses later on, but essentially it's an automatic order that you send to the broker that says if price drops below this point, and I'm not there to hit the button, you go ahead and exit my position for me. You go ahead and sell my stock for me. Well, let's say it was.
Okay. So it'd be more like I would say like a bot almost.
Yeah, but there are things that are built into every broker. So it's nothing you have to worry about getting. You send it whenever you send an order to your broker. Let's say it's Robinhood. I'm going to buy here. You can also say, I'm going to buy here, sell me, I'm going to buy at $1. Sell when I get to $2 or sell when I get to 50 cents. Right? So if it goes up to $1, sell, my profit. Or if it goes down 50 cents, sell, that's my loss. Automatic. So I don't remember what stock this was. Let's just say it was at $100. And I had my stop loss set at 95. Well, the next morning it opens up at 90. Well, nothing's going to happen, right? The computer says when price hits 95, sell. Price was at 90. There was no, I'm sure he probably wanted me to get out. No, it gapped below my stop loss and did nothing and kept going down. I was a brand new trader, and I'm literally staring at my screen.
I think I remember this.
Saying out loud, I was a tuning at the time, saying out loud to my computer, what do I do? What do I do? What do I do? And I said that nonstop for 5 minutes. What do I do? I was paralyzed. Obviously there's ways around that, but it's one of the reasons I don't like stocks. But what I do like is that stocks are everyone understands stocks. So it's a good way to understand and learn the basics of what's a chart, what's happening inside of a chart. So when you see these candles, I just see them as information. Price is going up, price is coming down, price is going up. But inside of that candle are millions and millions and millions of people
lines.
Buying and selling. You see lines. So let's dive even further into the specific strategy we're going to be trading here, which is forest. Let me show you on the screen my my slides here to demonstrate what I'm talking about. Can you see what I'm looking at? The chart on my screen. Very, very white background.
Yes, very
okay.
white.
So this is just the S&P 500.
It's always about race with you.
It's always about race. Do you know what the S&P 500 is?
Isn't it the top 500 stocks that whoever S&P is determines gets to be in it?
Well, Standard & Poor's is who S&P is, and it is supposed to be, I'm reasonably sure it's almost exactly this, it's supposed to be the 500 largest companies in America. And I don't know how often they update that. But you can go out there and buy one share of stock for all 500 companies, or you can buy what's known as an ETF, an exchange traded fund. Someone else has bought a whole bunch of shares in all 500 companies, and you can buy shares in that company. So it's a fund, like a mutual fund.
Okay.
So this just follows the price of all 500 of these. So, and it is used, this and the Dow Jones Industrial Average, which some people refer to as the Dow. I'm sure you probably heard about the Dow Jones. Those are the two.
I've heard about the Dow. I mean, isn't it the same thing as the S&P?
It's a little less democratic than the S&P, and it's only 30. So the Dow Jones is the top 30 stocks as selected by the editorial board of the Wall Street Journal. Yeah, so they pick which 30 stocks go into the Dow Jones, and that's it. So I don't like using it because
it's like the college football playoff committee.
Exactly like the college football playoff committee. Only more transparent than the college football. I mean, it's terribly untransparent, but it's more so than the college football playoff committee. But we don't want to talk about that. Or we want to talk about the fact that number 2 LSU beat number 1 Oklahoma and fell to number 3 afterwards in gymnastics. Anyhow, did you hear about that? We played Oklahoma.
I did not.
2 weeks ago.
How does that work?
We beat Oklahoma. We were number 2. They were number 1 in gymnastics. We beat them like a rented mule at home. And Monday morning, we were number 3. And Oklahoma was still number 1.
What?
Yeah. Anyway.
I mean, did we beat them by like 0.025 points or something like that?
I don't recall, but anyhow. So the S&P is not like the college football playoff in that respect. If you were to look at this chart, what would you tell me is the overall general direction? This is the chart of the S&P for 2024. Would you say this is up, down, or sideways?
I would say it's very. I would say it's varying, kind of up and a little bit sideways.
So, by the way, I say up, down, and sideways. Those are the only 3 directions prices can go: up, down, and sideways. However, when you ask
can't go backwards?
They cannot go backwards. That would require wibbly wobbliness. I should probably put my TARDIS poster behind me. When you look at a chart of any stock or of anything, different people will have different opinions about what that chart is saying. I mean, you could say, okay, this is overall, in general, going up. However, where is my controller? It is right here. However,
mine's right here.
So, roughly up, right? You would say that based on that green line, which may or not be green to you. But there are obviously spots where it goes down during the course of that year. And if you were living through that, went down a lot. There's also spots where it went dead sideways. And each of these 3 directions is an opportunity for someone to trade a particular way. I like to go with the
How does dead sideways work if it dropped during where it went sideways?
So a trend trader says, I'm going to look at the overall trend and I'm going to just get in at the beginning and ride it all the way through the ups and downs to the end and get out. A counter trend trader says, I'm going to wait while price is going up. I'm going to wait to a spot where I think price is probably going to go down, and I'm going to sell when everybody else is buying in the hopes that I've called it right and price is going to start going down. A range trader says, ooh, price is going sideways. I'm going to draw a box around this section, this area, and when the price gets to the top of the box, I'm selling. And when the price gets to the bottom of the box, I'm buying. And I'm going to go back and forth, back and forth, back and forth, buy, sell, buy, sell, buy, sell, as price just ping-pongs inside of this box. Now, eventually, price is always going to break out of that box. And that's when range traders hopefully get out and trade differently. But those are the 3 ways to look at it. The same chart has both up, down, and sideways inside of it. Now, I am a trend trader.
And Nick has a cat.
Nick has a cat. It comes and goes inside the frame. And I have a way of teaching people how to discover their own trading DNA. What kind of trader are you? I actually had a strategy. I had an algorithm strategy. I know you're probably very interested in these automated robotic strategies that run on their own, these algorithms. Yes. I had one.
The more I can have something else do and I not have to touch, the better.
Yeah, absolutely. Now, we'll get into a discussion about algorithmic trading versus manual trading at another time. But the long and the short of it is that most people assume that trading an algorithm is going to take less time than it actually does. It does require more time than you think in order to do it correctly. But anyway, I had a strategy. I'm a trend trader, and I had a strategy running on an algorithm that was counter trend, and I hated it. Oh man, did I hate it! It made money, but I hated it because it went counter to my trading DNA. I want to ride the trend up. I don't want to pick a spot where I think the trend's going to stall out. Everyone's got that within them. When you look at a chart, what do you want to do? Do you want to stop buy or do you want to sell based on where? That will let you know. Now, as a trend trader, I have 3 strategies that I like to use for the pullbacks. Do you see these area here where price was going up? It came down and then went back up again. It came down, these little dips. You see those?
Yes.
If you're listening along on Spotify, basically imagine a straight line going uphill, and you stick some U's in that line. So it's going up, it goes down and back up again, it keeps going up, goes down and back up again. So it's just like this little dip, this little pullback, like a pothole in an uphill climb. Well, let's take a look.
It's like Highway 49 in Mississippi.
Like Highway 49 in Mississippi, especially between you and I. So
yes, very much.
I came up with these 3 representations of my trend trading strategies. Frank, Forrest, and Bob. Now, these are ChatGPT created non-copyright infringement images of these 3.
Hopefully.
For whatever reason, it didn't have any problem creating Frankenstein. But when I told it to make me Forrest Gump, man, did it object. And I told it to make me Bob the Builder, man, did it object. I call the first 2.
Maybe because Frankenstein is a lot older
I would assume
and the copyright has gone out.
And
Bob the Builder, I remember watching Bob the Builder when I was like 3.
Yes. And Forrest Gump's, essentially it's just Tom Hanks, right? But anyway, I managed to work my way around it. I suspect that, Mary Shelley wrote the book Frankenstein, and then somebody else came along with what the image should look like. So
it ended in 2015.
Bob the Builder ended in 2015? It's over?
Yeah.
Bob's dead?
Bob is dead, apparently.
Oh, dear.
From 1997 to 2015.
Well, this podcast
apparently the first episode was not in English.
The reason I call the first 2 Frank and Forrest is because I love a strategy that is dead simple. And so I'm representing dead and simple. Yes, you're cringing as if I said a dad joke. By the way, ooh, okay. If you're listening on Spotify, I apologize for what's about to happen. All right. What do you call a belt made out of watches?
I have no clue.
Waste of time.
I got one for you.
Oh, no.
What do you call a bird that's afraid to fly?
I don't know. The chicken?
Chicken.
Oh, you know why?
Because.
Yes. Okay. We just drove off.
Editor, make sure that stays in.
We just no editor. If you want me to ever serve you chicken again, stop that. So dead and simple, and I love strategies that are dead simple. So that's why I picked Forrest and Frank. And why Bob? Well, I've got a breakout strategy, BO. I said, well, okay, I'll call it Bob because I call everything Bob. In my book, Trading with Joy, I reference a story in the guy.
Yes, you have called me Bob.
I've called you Bob. So Bob represents the breakout. So let's take a look at how these 3 strategies come into play. So we're gonna look at this little box area highlighted. So Forrest says, I'm going to get in long at the point that I think that pullback is going to stop. So price is going uphill. Price is heading northwards. And has a pullback, as price always does. Forrest says, let's see if we can figure out the bottom of that pothole. Hang on, sorry about this. So that's what Forrest does. Forrest gets in when price is still going down, but at a spot that we think...
Redo that part.
Say what?
The pothole. Well, let's redo the pothole since we were both struggling.
Okay. So what Forrest does is wait for that pullback to start happening, and then try to
Mhm.
high probability guess where the bottom of that pothole is going to be, where the bottom of that pullback is going to be, and get in right there. Probably the best price you could get in at, and say, this is the spot. So as we're coming down and we flatten out, that's where Forrest gets in. Forrest says, I'm gonna get it. I'm gonna wait for this to come down, and I'm gonna get in right there. That's the best price you can get in on this pullback. And that's what a trend trader really does. The last thing you want as a trend trader is to get in at the very high, right? You want to get in low enough that you're going to have some room to make money. Now, Frank says, okay, I think that I'm going to wait just a little bit. I'm going to wait until I start to see price go up a little bit. I'm going to wait until I can tell that we've had the bottom of that pothole. We've walked along the bottom of it somewhat, and now we're just starting to make our first attempt to head back up again. So Forrest gets in at what it thinks is the bottom. Frank waits for Forrest to do its thing and says, okay, I have a little bit of confirmation now that we're heading back up again. Now I'm getting in. Bob.
So can you have multiple algorithms running on one trade?
Absolutely. Yeah. I mean, it depends on your broker. But you can absolutely have multiple strategies running on anything out there. And as you develop as a trader, you're going to want to. One of the reasons I had that algorithm of mine that I hated running was because it did the exact opposite of me. That's a perfect complement to my strategy. I'm a trend trader. Let me find a counter trend strategy to run that doesn't mind that I hate it so much because it's a robot. Who cares?
I thought you were a swing trader.
Grok has feelings.
He's dying inside, Chris.
I don't know why. So that's what Frank does.
It's all the talk of the college football playoff.
Probably. Bob waits for the other two to do their thing, and Bob waits until the point where we're higher than we were when we started going downhill. That's why it's a breakout. Bob waits for price to break out of a previous high. We had been going up, we came down on a dip, and we got back to where we started from, and then a little bit more, and then Bob takes over. Bob says, okay, I want total confirmation that this pullback, this dip, this crisis, this funeral for Bill Gates, what's his name for Apple?
Tim Cook?
Steve Jobs.
Or
I'm going to wait until the entire world
Tim
is done.
Apple.
Say what?
Tim Apple.
Tim
that's
Apple.
That's
right.
That's who takes
Apple.
over now.
I'm going to wait until the entire world is done mourning Mr. Apple, and price has gotten back to normal. Now I'm getting in. So these are the three different ways that you can enter into a trend pullback. The one you and I are going to be starting with is going to be the first one there, which is Forrest. And
Okay.
I'm going to show you how to use this strategy. And we're going to run through this. It's going to be quick. And I'm going to probably do more of the explanation next time. So let me go back to my chart. You pull up your chart on your screen. You turn Forrest back on. We turned them off before. You remember how to do that?
Now there's a blue wiggly line.
There should be two blue wiggly lines. Maybe if you made your screen white instead of black, you would see it better, or maybe you can change the colors there. I'll tell you what, just so that you can demonstrate.
Wait, I see a red wiggly line and a blue wiggly line.
All right, so go up to the word Forest and hover over it, and you'll see both the eyeball and a hexagon with a circle inside of it. Nope, on the left.
Oh.
Click on the hexagon with a circle inside of it.
Yes.
That's where you can adjust multiple things. So you can adjust the colors to mine show up okay on a white background. I do actually like a black background better when I'm trading, but when I'm showing...
Oh, wait, are you talking about the one on the bottom?
No, I'm talking about the one, you got it right there.
The blue wiggly line?
So when you go to style, you should have color options to pick from. And...
Yes.
Okay. So we can change them. If that's where you can go to change these if you want to. But anyhow, so here is what you're looking at. You're seeing two lines, and you're seeing dots. Are you seeing spots, Nick?
Yes.
Do you smell toast?
No.
So what we're seeing here are two things called moving averages, and we're seeing those are the lines, and we're seeing dots that represent new high. So first and foremost, what's a moving average? Do you know what a moving average is, Nick?
Not a clue. I've never heard that word.
All right, a moving average is the most basic indicator you can put on a chart. And all it says is, over the course of the last 100 days, a 100 period moving average would be, I'm going to take the price of Apple over the last 100 days. I'm going to add up all 100 prices and divide by 100. And I will have an average of the price of Apple for the last 100 days. Does that make sense? We take all the prices.
Kind of.
It's anytime you average things together. You know, I'm going to take 5 and 6 and 7 and add them up. Be 18 and divide by 3, which would be 6. All right, it's an average of those 3 numbers. Does that make sense?
Sure. I'm not good at math, but sure.
We were a homeschool family, and I think I was in charge of teaching Nick math. So I do apologize.
No, Mama was.
Oh, well, I'm not going to throw your mother under the bus. But
dyscalculia is what it's called.
I'm sorry, what?
Dyscalculia.
You're saying a word there. What does that mean?
It's the number version of dyslexia. So numbers flip in my brain when I'm reading and looking at numbers. They flip, or sometimes I don't see them in the correct order.
Well, the good news is these are lines. You don't have to worry about numbers. So if we were to take the last 10 days of the Apple price, and we could go on here and do it manually. We could say, okay, on Friday it closed at 241.84, and on Thursday it closed at 237, and we did that day by day by day, and we added all of those up, and then divide by 10. You would get one price that is the average price of Apple over the last 10 days. Does it make sense?
Yes. Mine shows, granted, on Friday, Nick, opened at 237.
It's always a close price. A moving average is general. I say always. You can pick what you want your moving average to be based on, but generally speaking, on a daily chart, you're going to say, what's the closing price today? By the way, hey, go up to next to the indicators button. You should see a button that shows little tiny representation of little tiny candles. We can switch from a candle chart to a line chart.
Hollow candles, volume candles, bars.
Choose line chart.
What does it say? Heikinashi?
Heikinashi. We will not go into Heikinashi.
I want to click Heikinashi.
Okay, click Heikinashi. Heikinashi pretty cool.
Doesn't look all that different.
Well, this one shows trend. So the candles are all going to be green as long as price is still going up. I mean, don't do point and figure.
Oh, point and figure.
No, that's a whole different thing. But it's good.
Which one am I doing? Line?
You're doing line. It's good for people to see these options. So a line chart is just going to show you.
Ouch! Cat moving in my lap.
There you go. So there's your line chart. It's just a closing. So you don't have all that other information. You just got the closes. Is this what the close looks like every single day?
Okay, so which one is the closing now?
Every little point that you can't see on the chart, everywhere the line bends is a point, which is the day.
Oh,
that
okay.
Shows the close.
So like from here to here is.
Well, there's several days, but you don't notice them because they've been smoothed out by the line. Now,
why would you do something like that if you're trying to see? I guess if you're just doing trend.
Here's a more advanced concept that we'll get to. There's a thing called support and resistance that we will look at some point. And a line chart is a fantastic way to see support and resistance. All that means is, are there spots on this chart where price just keeps going back to? And you can pull a line. If you go over to the left-hand side of your page, on the very left-hand column, there's all these tools you can use. One of them is a line drawing tool, which is
trend line.
So click on the little tiny arrow next to it. Little tiny arrow. Click on it, and you'll have options.
Yes.
One of them is horizontal line. Click on horizontal line. All right?
Yes.
So now pull that across the screen, and everywhere that you happen to see, the line, the jagged line of your chart touch more than once is a spot where we would put a support or resistance line. It's a whole different way of trading. One we'll probably get into. But a line chart's a great way of seeing that.
So I guess you would be able to do something like that for like, okay, it peaked at, well, let me move it. So it peaked at about
Yeah, that's a great way to put it.
258, and then you could say, okay, let's look at the past.
Yes, absolutely. This is
And
a
it's
great
not
way.
peaked at 258 cents.
And so once that line's on your chart, then you go back to your candles, and then that line is there to remind you, hey, this is where we stopped back in 2016. I mean, because you can go all the way back in time. So these lines, the line chart is a great way to demonstrate places where price has been before. Yeah. So go back to candlesticks and go back to the moving averages. So we were talking about what the moving averages mean. So you take the average of the last 10 days and you stick that point on the chart. Well, the next day you do it again and you stick that point on the chart. And the next day you do it again and you stick that point on the chart. Because every day that moves forward, if you're taking the average of the last 10 days, every day you move forward, what? You're taking a brand new one and you're dropping off one. Does that make sense? So if I take, if I have a 10-day moving average and it starts on March the 1st, and this is March the 10th, right? So it's going to go March the 10th back to March the 1st. Well, the next day, my 10-day moving average goes from March the 11th to March the 2nd, right? Because it's just the 10 days. It's a rolling 10 days. Every brand new day, we add one to the front end, and we drop it off the back end. So that line's going to be constantly moving. You're plotting a point and connecting it to the last one. Plotting a point, connecting to the last one. So every day, we plot a brand new average of the last 10 days, and we connect that point to the last line we drew.
Oh, you can move it.
Yes. So, what the premise of the forest strategy is, without even knowing what these things are, when you see a new color dot for the first time, right, a new blue or a new red, you wait for price to pull back to the blue line and you get in. And you set your stop loss, the price that you're going to automatically get out if you're wrong, at the last colored or the other type of color. So let's say that you get your first red, like we see on the screen here is a red dot. There's a red dot January 25th. Are you seeing that? You may have to scrunch up on the side. If you go over to the numbers on the side where the price is, and you hold down your mouse key and you drag up and down, it'll scrunch that chart. So go over to the right. And right there. So clicking drag down.
Oh.
So you can scrunch the chart as needed. So you see a red dot on January 25th?
I do not see
I do.
a red dot on January 25th.
Yep. All right.
Hold up. What?
January 21st. Excuse me.
21st, yes.
Okay. So without explaining any more, and do you see a red?
You can click on it.
Do you see a red triangle on January 31st?
Yes.
All right. What this says is, hey, we've got a brand new downtrend. We've got to pull back to our blue moving average. Time to get into this trade. Trying to sell. And at that point, you would set your stop loss at the last blue dot, and you set your first take profit at the red dot, and you're done. This is the simplest strategy that I know to teach you.
So you would essentially put your stop loss here at 261.58.
There's actually
a tool
that I can show you. Cool. So directly, you remember where you found that horizontal line?
Mm-hmm.
All right, go down 1, 2, 3, and then click on the little tiny arrow next to it, and click on short position.
Short position.
All right, so click right there where that red triangle is.
Okay.
All right, did you click? Now,
yes.
Brought a little box up. Drag the red box up to the top of that last blue dot. This represents your stop loss. And folks are watching along thinking,
oh, wait, mine didn't.
Saying they're all over the map. Yes, I know. Look, we've got a course that lays this out coherently and cohesively.
Didn't do that.
If you grab the middle dot, it'll move the chart. If you grab the top dot / rectangle, it'll move just the top part.
There we go.
All right, now drag.
So that would be your stop.
That's your stop. Now drag your bottom left corner, and drag it to the red dot.
Any specific spot in the red dot?
You're gonna be going to the lowest part of the candle that dot is underneath.
Oh, then I need to readjust my other one as well.
So yeah, the stop loss goes to the high of that candle that the blue dot represents.
There.
All right, and that would be your first trade on Apple. And
so that would essentially say if it goes down to here, buy. If it goes up, sell.
No, this is saying I am selling at this spot where you've got the triangle. I am selling. If it goes up to the top of that red part of the box, it's my stop loss. I'm out for a loss. If it goes down to the bottom part of that green, I have made money. So this is a
wait. Say that again. So if you buy at in the middle.
No, we're going short at this point.
You're selling. Okay, you're going short.
We're selling short. That's what the red dot represents. The red dot represents a downtrend. So in a downtrend, we're going to sell first, and then we're going to buy. Okay. So you sell short and buy to cover. These are concepts that are, I know they're a little bit difficult to understand, but essentially you go to your broker, you borrow 100 shares of Apple, you sell those 100 shares at $236, and you're hoping to buy them back at $219, making $17 of profit, $17 per share of profit. So it'd be $1,700. So if we're selling 100 shares here, we're hoping to make $1,700 out of this. We want price to go down. Okay. The chart has said that we think price is going to go down. So we're participating in that downtrend. However, price could keep going up, in which case we get out at our stop loss, which would be up there at the very top of that chart. So this is a dead simple strategy, which says I'm going to wait for price to give me a direction. Blue dots means I'm going up. Red dots mean I'm going down. Then I'm going to wait for a pullback, that pothole we talked about. I'm going to wait for that pullback to happen, and I'm going to get a really good mathematical probability, that's not a word, a mathematical estimate.
No, it's not.
I guess. At when I think that is the bottom of that pothole, this will be an upside down pothole because we're going down, and I'm going to jump in this trade hoping that price goes back in the way that it said it was going to go originally. So in this case, we're in a downtrend. We're going to get in the trade and hope that price resumes the downtrend. If we scroll back to, let's find a spot where, scroll back to May of 2024, which you can just click and drag to the right.
Yeah. May. Okay.
All right. Do you see that he had a whole bunch of in March, April, and March and April? You had a whole bunch of red dots. Click and drag up. You can move you can pan by clicking and dragging on the screen.
Okay.
You got it. So then on May the 3rd, we had our first blue dot. You see that?
Yes.
Well, so this was the spot where price was short.
This doesn't help being colorblind.
No, it does not. But you can change this to black and white. You can change it to anything. All you gotta do is remember what color means what. So this is a spot where you say, all right, we're in a brand new uptrend. We're going to go long. We're going to buy Apple as soon as we have a pullback. In this case, we didn't have one for a while. But that's the basic premise of this strategy. It just says, I'm going to wait till I know which direction. I say no. You can never know. This is all based on probabilities. I'm going to wait till my strategy says, hey, price is heading this direction. I'm going to wait for a pullback, and I'm going to get in at the bottom of that pullback so that I can reap the benefits of price resuming the original direction. That's all it is. Dead simple strategy.
Okay, you said, I'm going to hijack for a second here. So you said that when there's, like during the weekend or whatever, the gap you measure from the top of the other one to the bottom of the next one where that cap is?
No, you measure from the close to the open. And in the case of the one you're looking at
If we look at
you'd be going to the bottom.
August 2nd. So it'd be here to here?
Those are both green candles. So you're going to go from the top of the little one to the bottom of the big one. You're going to go from the close of the previous one to the open of this one.
Gotcha. So it dropped down $20.
Yes. And out of what is price at that point? Look over to the right. What is price?
199.07 at open.
So it basically it dropped $20 on a $200 stock. So it lost 10% overnight. That's significant. I mean, Tesla lost 30% this past week. That's more than significant. That's horrific. But it happens. Nothing is ever a straight line in markets. And all we can do is plan ahead and endure all the wibbly wobblies that are going up and down the entire time. Well, we'll get into more of this. Next week, what I want us to do is sit down and look at you specifically and go through a sort of an assessment that I have that determines what kind of trader can I be? Can I be a day trader? Can I be a swing trader? Can I be a scalper? I'll define all those terms for you. A lot of people...
Okay, scalping isn't like the same as with graphics cards, or no?
It is not any... Well, I have no idea what you're talking about. I'm going to assume not. Scalping is essentially trying to make...
Scalping graphics cards is like... Yes?
Go ahead.
Scalping and graphics cards is... Okay, let's... the 5090 just came out recently, or well, technically the 5070, but people are buying it at, I don't know, $750, $749, and selling it at $1,300.
Yes, scalping is essentially that. Back in the day, people used to talk about scalping football tickets. You'd go out there and you'd buy it for $10, and you'd sell it for $20. Just folks who are walking around in front of a stadium, holding the tickets up. That's scalping. So in the markets, you're going to buy it. What you're trying to do is scalp the minute by minute, second by second fluctuations. I'm going to get in at 121.32 and get out at 121.33. And I'm going to do that 100 times today. And they're trying to make very, very
How do you
small
make money doing that?
Well, number one, you're using 10 grand a pop, so that one penny of movement gets you $1,000. And also you're doing 50 to 60 to 100 of them a day. You're just racking them up. There's scalping. There's day trading, which is I'm going to get in at 100 and I'm going to get out at 102. That might happen in the next 5 minutes. It might happen in the next 3 hours. But by the end of the day, I'm going to make sure I'm out. I'm done. Those require a lot of time.
That way, if anything crashes, you don't have that gap to deal with.
You're there. And you're never away from your computer, not monitoring, so that nothing can happen without you seeing it. So I tell people, scalpers have to stare at their screen and not blink. Day traders, they can go to the bathroom one time, but they really probably shouldn't. They need to be at their computer the whole time. Swing traders look for longer. They said, I'm going to get in at 100, I'm going to get out at 120, and I'm going to probably be in this trade for a week. And I'm going to go about my life during the course of that time. And then there's position traders.
Swing traders for that one?
Yeah, that's a swing trade. That's what I do. All right, I swing trade, and that way, I've only got to look at my charts for 15 minutes a day. I open them up, I see what I'm going to do, because I'm trading the daily chart. And, nothing's going to happen. Like, right now, nothing's going to happen for when the market's closed. Nothing's going to happen on Apple till it opens up the next day. So, you can swing trading, apart from the fact that who knows what's going to happen overnight. Swing trading the daily chart for stocks is kind of great for some people who have a half an hour a night to trade because the market's not moving.
Yeah.
And you got position traders, people who trade like once a week. I position trade with options. Once a month, I do my trading on options and I let it go the rest of the month. I don't even look at it because I've made that plan accordingly. Well, next week I've got this it's like 8 questions. We'll go through them. It says, can you be at your computer this time, yes or no?
Oh, it's a quiz.
It's a quiz, yes. And we'll evaluate. So I haven't given you a quiz since you were probably 14 or 15. This will be fun for me. So we'll do that next week. And that's
for you.
It'll be, well, the audience will also enjoy that. That'll be a ton of fun for everyone to watch you take that quiz. But it's so important because everyone has to find their own trading style, and everyone has to find their own trading time. And when can you trade is honestly the most important question you answer first. Above and beyond, what am I going to trade, or how am I going to trade? When am I going to trade? Because we're all busy. And if you're adding something to your life, what I mean, our days are already full. What are you going to be taking away in order to make this happen? So that'll be for next time. In 3 weeks, I will be on a cruise, and Nick will be flying solo on this podcast, although I am trying to line you up a guest to interview, which I think will be interesting. That'll be fun for you.
Okay, then.
Okay, yeah, I didn't tell you that.
Is it going to be my brother?
No. There's actually a trader out there. He's a Christian trader that I found who trades the NASDAQ. He's a day trader on the NASDAQ. I'm going to see if he's available. He may not be. It might be your brother. I doubt it. But I'll find somebody in the trading world for you to interview and to give you some tips and pointers. And as long as they don't say ignore your father, it'll be all right. And even if they do say ignore your father, it'll be all right. So
I mean, we could always look at Pierre.
We could look at Pierre. Yes, that's and plus the good thing about Pierre is he can cuss at you in French and you'll never know, unless you know French.
It'd be fun.
Yeah.
I don't. Alrighty, guys, that is all for the Godly Trading Podcast. We will catch y'all 6 p.m. on Mondays. That's going to be Central Time. Any last words for you, Father?
No, this was fun. I know we were a bit all over the map, but we'll get into a groove as we do this. I appreciate everyone watching, and I thank you for being here, giving up your time to listen to the old man.
Yes, listen to the old man talk to his son, who is going into all of this very blind. So we will catch y'all next time. Have a good one.